Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Todd A., Jeff S., Paul M., and Brian H. We've got a returning guest on the program today, and one we're pleased to have back with us. Mr. Ryan King has joined us. Ryan is the Executive Vice President, Capital Markets and Strategy of Equinox Gold. The company is a growth mid-tier gold mining company that has operations across 6 jurisdictions in North and South America, with its newest operating mines, the Valentine Gold Mine in Newfoundland and Labrador, Canada, as well as the Greenstone Mine in Ontario, Canada. Equinox Gold is now managing a total of 9 mining operations from Canada, California, United States, Mexico, Nicaragua, and Brazil, with 2 additional mines on care and maintenance pending expansion plans, among further expansion and exploration opportunities within existing operational areas. Across its entire portfolio, Equinox is expected to produce between about 785,000 to 915,000 ounces of gold during 2025 at an all-in sustaining cost between about $1,800 to $1,900 US dollars per ounce. Equinox Gold is listed on the New York Stock Exchange under the symbol EQX and also on the Toronto Stock Exchange under the same symbol EQX. Mr. King, thanks for coming back to update on Equinox Gold. Welcome.
Well, Andrew, thanks for having us again. Appreciate the time. And boy, that was quite the description, wasn't it? There's a lot going on here.
Yeah, just a little extra for you there. And, we like to talk about, production companies such as Equinox growing, doing transactions, firing on all cylinders, working out the kinks. It's good to talk about these things. And we have, of course, a gold price environment here that is quite interesting for a number of good reasons and also a number of reasons out there in the world that are quite head scratchers. Great to have you back on the program, Ryan. And I think the last time we talked, it was Calibre Mining. You guys were working on growing that company and doing a number of transactions. And it's been a while since we've chatted. And now, of course, Calibre is part of Equinox Gold. Maybe we just start with that. Transaction is now completed. You guys are working on further production profile growth. Talk about Equinox as it stands today.
Yeah, sure. No, happy to do so. And again, thanks for having us back on. It's an interesting time, as you pointed out, quite favorable, of course, for precious metals at the moment, and therefore more so for precious metals equities, those that are producing, developing, exploring. So it's an exciting time. And so at your request, talk about the transaction. Well, if I may, I would like to talk about first a transaction that this group did probably 2016, 2017. At the time, we had a company called New Market Gold. New Market Gold, if you may recall, was a successful gold producer with assets in Australia with a primary asset called Fosterville. And it was Doug Forrester's vision to create a multi-asset gold producer. And we took over a company called Crocodile Gold in 2015. What was so exciting about this opportunity was that we discovered one of the highest grade underground gold mines in the world in Australia at this Fosterville mine that had had quite a significant checkered past, if you will, very complex metallurgy. It was a low grade, stibnite infused gold deposit, high cost, and Doug believed that there was very good opportunity for exploration beyond what was known at the asset. And lo and behold, we did discover tremendous high grade gold. So what's exciting about that was, of course, during that time, we weren't seeing the gold market that we're seeing at the moment, but it was an exciting time because of the exploration success and the turnaround of that asset. And Darren Hall was chief operating officer. Blaine Johnson was involved. I was involved as well. And we went through a transaction where we merged that business with Kirkland Lake Gold. And Kirkland Lake's flagship asset at the time was Macassa in Ontario. So we believed that by diversifying those into a larger portfolio, larger business, you could get the attention of the market, better liquidity, better trading, and just again, diversified with two high quality assets in the portfolio to drive share price performance. Well, during that transaction, the announcement through to close, there was a lot of opposition to do this. You know, investors talking about no synergies. It didn't make any sense. Just why do this? It just was so complex and complicated, so much pushback. And in the end, when we closed that transaction, Tony McCooch and Darren was the chief operating officer. I was involved in corporate development and marketing. The company went from about $6 a share in early 2017 to, I think it peaked north of $70 a share. So this group is no stranger to big transactions like this. And now I bring it over to the Calibre Equinox deal. And, when we announced that deal, there was uncertainty, there was trepidation. This doesn't really make a lot of sense. We don't want to get involved with those guys. We don't want to get involved with those guys, vice versa, right? And in fact, it led to Equinox coming out with an increased bid to merge the companies together, which ended up closing, of course, in June. But there was a lot of pushback and a lot of opposition. But our view, Doug Forrester, Ross Beatty, Blaine Johnson, as architects of this design, these are guys that have created significant wealth for shareholders, created billions of dollars of wealth for shareholders. This company is now set up to really drive Ross's legacy. Ross being the chairman. His first company was Equinox. This company is Equinox Gold. But we set it up to do such a thing because the quality of the team, the quality enhancement of the assets in the portfolio is really going to drive share price performance. Between the two companies now, as you just said, we've got multiple assets across multiple jurisdictions. But importantly, what it's allowed the business to do is tier up in terms of quality and jurisdiction of ounces and assets. For example, Calibre was advancing the Valentine Gold mine in the central region of Newfoundland, Canada. And of course, Equinox Gold was declaring commercial production and ramping up the Greenstone mine in Canada. So you've got two high quality cornerstone assets at the beginning of their long lives in Canada coming to fruition. So those two assets alone should produce between 450 and 500,000 ounces once hitting nameplate capacity of those operations. So that will drive significant value. And here we are in a tremendous gold price environment, which investors across the globe are looking for these types of opportunities. And this is why companies put these assets together and smart, experienced entrepreneurs look to do these types of deals. So the deal closed in June. As a natural course, from time to time, there is a shift of management, and Darren Hall, who has tremendous amount of experience in operations and business, is the chief executive officer now of the business. A number of Calibre folks actually got involved at different levels of management. David Schumer is the chief operating officer of the business. So very exciting to see this portfolio come together. And now is an opportunity for us as a team to deliver this great portfolio that Ross has put together over the last several years, assembling this high quality portfolio for a time that he knew that gold prices were going to go up in time. So let's assemble this quality portfolio. And Darren, of course, has the experience and the expertise to be able to deliver on this portfolio. So I'm very excited to see how this unfolds and how we can unlock the value of this portfolio in this environment.
Thanks for walking us back over this and some of the history there, the new market days, all that good stuff, how you guys have put this package together as well with Calibre and some of the work you guys have been doing. Has been some really fantastic work over the years. There's a lot of synergies in this mix and this complete transaction here that you guys have finished off, and lots more to be had here going forward. I know you guys will remain active on operations and everything about this market to grow the company, return capital and growth to shareholders. So I appreciate that.
Sorry, I should interrupt just for 1 second and say that I brought up the new market transaction and story because I think there's a lot of similarities between Calibre and Equinox in that transaction and what that could mean from an unlocking of value and opportunity for share price performance with this deal as well. So that's why I equate it, because if we look since the date the deal closed to now, yes, the gold price has gone up, but a lot of things have evolved to unlock value for shareholders. And I think investors have a higher level of confidence. They're excited about the future, and they're really looking to see how the team can unlock the value from all of these new assets. So I wanted to tell that history, but also the new market story, because I think there's similarities. I can't say history can, it may not ever repeat itself like there in that situation, but I wanted to bring that up because I do think there's opportunity here with Equinox.
Absolutely. No, I think there's some rhythm and rhyme to this as well. So appreciate you going back through the history there and the team's ability and the operatorship that's there. And of course, Darren coming in here, taking over for Greg, both good folks. Definitely Darren's going to really dig deep and find ways to squeeze the operational efficiencies out of this continued, and of course work out some of the kinks. Greenstone's still in progress here on full ramp up, and then you guys just actually, let's transition to that. You guys just produced first gold at Valentine during September. You guys are still ramping up, commissioning work ongoing. Why don't we transition, talk about that, how things are going at site, and then also how you're seeing that current schedule to ramp up to steady state. And then remind the audience, because this is a new one, remind the audience of the production profile of this project.
Oh, sure. I guess we can go back a little bit in history first again. The Valentine asset is what we call a greenfield site. So this is a site where there has not been any past production. There was drill holes way, way, way back in the 70s and 80s. I think it was Noranda that was around the island at that time doing some exploration looking for copper. Well, fast forward to 2009, 10, 11, Marathon Gold was out there prospecting and looking for opportunities within this Valentine Lake shear system. And actually, Nick Capps, a senior geologist within the team, was involved at that time and is still involved today because of his level of excitement and ownership and expertise on this asset. Discovered what we call the Leprechaun deposit. So the first deposit was discovered in 2010, 2011. The second deposit was then discovered in 2015, 16. So that was located along the major fault through the property, which is about 250 square kilometers. So Leprechaun to the next deposit, Marathon, I think probably about 4 to 5 kilometers separating each one. And the team then thought, hey, we've got a project here. Let's start infill drilling, increasing levels of confidence in the deposits, bring it up to 2P or reserve category. Then let's work through permitting and engineering. And as they were doing that, you do what's called condemnation drilling. And that is where you're going to be siting and locating your infrastructure, your mills, your roads, your power, etc. And while doing that, they discovered another deposit located in between the two on the shear system. And it didn't outcrop, it had a bit of overburden. So discovered that between the two, and that's called Berry. So you've got Leprechaun, and in the middle is Berry, and then the third pit is Marathon. So there's now a 3-pit mine plan that has gone through all the permitting, that has gone through all the engineering. And so that is about 6 kilometers separating the 3 pits all together along a 35-kilometer shear system. Now, I would say that 90% of the drilling, if not higher, has all been centered around those 3 deposits, because you have to do a tremendous amount of infill to get it to a level of confidence for a mineral reserve. And so a lot of history there, but it was 2022 when the team started to build this Marathon Gold through equity and a debt financing package. Brought it through to about 50% through construction. Calibre Mining acquired Marathon Gold and closed the deal in 2024, and worked through the remainder of the capex, worked through the remainder of the detailed engineering. And then, as you just mentioned, excitingly just completed material portions of the construction less than a few months ago or even weeks ago. And we announced first gold on September 14th. So the asset now, we would anticipate, and this is not a complex ore body, this is not a complex mill. This is a simple, what we call crush, grind and CIL plant. It has the capacity to run about 2.5, maybe push to 2.7 million tons of ore through that plant a year, which then would produce approximately on a life of mine average about 195,000 ounces of gold a year. And we're saying that we would be able to do that at about a $1,300 to $1,500 all-in sustaining cost. Now, we haven't given guidance for this yet, but that's where we think the cost will end up, and that's where we think longer term the ounce production profile on a life of mine average would end up. You know, there will be some ups and downs through that cycle, but this is based on 2.7 million ounces in reserves in the three pits. So you can't look at resources when you're talking about a technical report or economic study. And so we haven't factored that into the longer term outlook. But what it means is that this is a stable, long life asset. So I think 12 years of the 14-year reserve life is about 195,000 ounces a year. But in total, there's about 5 million ounces of measured, indicated, and inferred resources. Excitingly, we believe there's tremendous upside from exploration. And I'll give you an example, is that in 2024, Calibre allocated some capital to drilling as we were advancing the construction, a very capital intense period. But we thought there was good potential, and during that period of time, I think it was October, November of 2024, we announced some significant drill intercepts located about a kilometer south of the Leprechaun pit. If memory serves, we hit 90 meters of 2 grams in a couple of holes, and then we hit one that was 172 meters of 2+ grams per ton gold. Drilling is ongoing. We've got 4 rigs actually operating now, but it's a very vast, untested geological opportunity that we have. Of course, excitingly, we're ramping up the operation from a production and cash flow perspective, which is obviously meaningful for Equinox, giving us another tier 1 jurisdictional asset. And so we would anticipate that ramp up should be hitting nameplate if all goes according to plan, likely by or during Q2 of 2026. And what we're seeing right now is we're seeing some really good effective ramp up. Darren brought in an operating team early, probably about a year early, to dovetail with the construction team to help overlap and ensure that, you know, the client, if you will, that's the operators, received what they need. And so the client was able to work with the provider, the construction team, in order to set up how they wanted so they could have an effective ramp up. And right now we're seeing a very effective ramp up. In fact, next week, actually, sorry, tomorrow, it's already this week, but so tomorrow we anticipate to have a very significant gold pour and a little bit of a gathering there during this gold pour to commemorate the first big pour and Valentine's ramp up to commercial production. So it's an exciting time for the people there. We got a great team there. And so I would anticipate that we're heading towards maybe a little bit more of an effective ramp up, but let's see how things go.
Well, I appreciate you walking us through that, Ryan, and definitely this has some good expansion potential down the road. Obviously, you guys will work on getting ramp up finished, kinks out, everything running smooth, steady state, and then obviously go on the attack there, so to speak, on some of the exploration expansion potential of this project. So that's very good. Looking forward to seeing that. I want to shift, just for sake of time as well, I want to shift over to Greenstone. Give us a brief update here on operations and how things are going to get up to full steady state production, and then what Darren's saying as far as when you guys expect to reach that full ramp up steady state, and anything else on Greenstone.
Yeah, absolutely. Of course, now the difference here is that Greenstone in Northern Ontario is what we call a brownfield site, meaning that there was some historical past underground production from a number of underground stopes. So the team has to, you know, when you're going through technical studies and analysis and engineering, you've got to incorporate that into all of these designs and analysis. And it can be tricky. It can be very tricky as you do resource calculations, as you do the different engineering for an open pit versus an underground mine. So Greenstone is an open pit operation. To your point, I think you said this in the opener, commercial production was declared last year. And here we are approximately 18 months from first gold, which was announced, I think it was in March or April of 2024. and we're continuing to ramp up. I'll start with 2025 here. The first quarter of the year, we were expecting to mine approximately 175,000 tons a day out of the open pit. We ended up getting about 130,000 tons a day. So there's a few complications there with reliability, with availability of equipment, and a few things. And in May of this year, there was the shift of people, and David Schumer started to get involved. And David has a tremendous amount of large open pit, kind of dirt moving operations around the world. He's worked in Canada, he's worked in Africa, and many places, but importantly, with a focus on large open pit mines. And so he recognized that there were some opportunities to drive some more effectiveness of that equipment. In Q2, after about a half of quarter of his involvement, and Darren's involvement, we started to see some uptick in material movement. Q3, we're tracking very well for about 180 to 190,000 tons a day, maybe even a little bit more. And the nameplate of the mine is about 195,000 tons a day. So the team is working through some of those issues that were identified, and we're seeing some great progress. We're seeing progress on grade, so grade is starting to tick up a little bit. What the guys are trying to do is find ways to minimize dilution in the mine and get the most effective material to the plant. I won't get into too many more technical details, but we are seeing some progress there. We're seeing progress at the mill. I think in Q1 we were running about 18,000 tons a day, maybe 17, 18,000 tons a day. We saw an uptick in Q2. And Q3, I think as we work through it, we've had a little bit more material hitting the stockpiles. We've had some slightly better grades starting to come in the end of September here. And we've had approximately, I'm not sure where we're at the moment, but we're probably running a little bit more in line with sort of between Q1 and Q2, probably very similar to Q2 in terms of throughput as we work through some of the different plant issues. But we're making progress there and understanding how to effectively use planned and unplanned downtime in order to make the plant as effective as possible. But in the end, we're seeing good progress, and I think we'll probably be on the lower to middle end of our production profile for 2025. Q4 is expected to be one of the better quarters of the year, if not the best quarter of the year, as we're seeing the progress made throughout the year. And then what is Darren saying just in general in terms of the asset? The life of mine average in the technical report showed about a 330,000 ounce a year production profile. We would say at this point in time, based on what we know, we're still working through some resource details, and we will have an updated technical report in the first half of 2026. But as we work through all of those details, we would expect that somewhere in that ballpark, I can't say exactly because as we work through it, we'll understand it a little bit better, but we would expect somewhere in that 300 to 330,000 ounce a year life of mine average is probably right. You're going to have some years that are up and years that are down. But in general, it's great to have a second tier one asset that is producing approximately 300,000 ounces a year at approximately between $1,500 and $1,600 all-in sustaining cost for the life of this asset. And again, with really good exploration upside.
Thank you for going through that. We'll continue to watch Greenstone here as you guys work out those kinks and keep this moving towards steady state and good progress here. And of course, Darren giving an extra assistance on this will be very good to see here as you guys get this sorted out and everything going well. I want to move real quick over to remaining operations. We covered the big ones here, but we can't forget Mesquite, California. Always been a great cornerstone operator there. Libertad Limon in Nicaragua, and then of course Arizona in Brazil, and then the Bahia complex, RDM Brazil as well. Maybe just run through those real quick. Any comments you have there on existing ops?
Well, a couple things I think worth mentioning. So, Mesquite is going well. That operation has been around for decades, produced millions of ounces of gold. We see some good exploration potential in and around that asset, but this year we're going to produce 85 to 95,000 ounces from the asset. But importantly, the team there has a very long-standing relationship with regulators. They've been around that asset for many, many years. Of course, at the same time, we're advancing the Castle Mountain asset, which is located in San Bernardino, California. So you've got that overlapping of teams that are going to be involved in Castle Mountain. Castle Mountain is a deposit that has been a heap leach mine for a number of years, a smaller heap leach mine. So we're looking at expanding that. We actually got put in the Fast 41 process. So this is a new process. President Trump signed an executive order, I guess it was a few months back, that allowed for the advancement of critical minerals, and gold falls into that category. So we would expect to have a federal record of decision by December of 2026. And we can't say for certain, but we would expect that state permits probably between a quarter or two thereafter. And so exciting to see another opportunity in California. This is a 200 to 250,000 ounce a year production profile. I think probably approximately a 15-year mine life. So an exciting opportunity for expansion in the United States. So you see how those operations can work with synergies and people and regulators. And the guys have done a really good job of pushing that along and advancing that along in the background. Brazil continues to advance this year, 250 to 270,000 ounces. A little bit of a higher cost profile. This year we're about 2,300, but to 2,400 all in sustaining cost. We can't forget that Brazil hasn't had a lot of, I'll say, additional capital. Most of the capital within the business has been going to the new builds and the new operations, significant capital investment period up in Canada. So it might give us an opportunity to review and look at these assets and see what could be done. You know, if you look at what Darren Hall did in Nicaragua, we started, Calibre Mining started operations in 2019, partnering with B2 Gold to continue on with those assets and unlock tremendous amount of value by looking at them slightly differently, implementing a hub and spoke operation. And I believe there's opportunities like that across Brazil. And there hasn't been a lot of exploration there as well. So there's exploration potential. And you look at Nicaragua, since 2019, that team has invested probably 10 to $20 million a year on exploration, and it has had a profound impact on the operations. When we started there in 2019, I think there was about maybe 100,000 ounces of reserves. And today, after implementing that new operating strategy and continuously investing operating cash flow back into that business, the company has produced 1 million ounces of gold there. At the same time, has increased reserves to 1.1 million ounces as of the end of 2024. And we've recently been putting out some excellent drill results in new areas at Limon. So operations there are going well, really generating strong, robust operating cash flow. And Nicaragua's all-in sustaining cost this year is $1,400 to $1,500 per ounce. So there's a great opportunity for some really strong cash flow. And this year, Nicaragua is going to produce about 200,000 to 250,000 ounces. And we've got a good line of sight of 5 years of mine life in front of us. So exciting times there. But that's, you know, in general, that's how the operating assets are going. I'll switch over to Los Filos now. Los Filos is currently on care and maintenance, but an exciting asset. This in all categories and reserves and resources has approximately over 15 million ounces of gold. Darren looked at the operations and said, well, you know, right now with the asset being on care and maintenance, this is a heap leach operation. We are starting to see more sulfide material go on the pad. So we'd like to, a study has been done to look at a conventional leaching operation. So a CIL plant would be required and all the auxiliary infrastructure for that. So a technical study was done in 2022, which outlined approximately 250 to 300,000 ounces a year of production for putting a plant like that in place there. You know, we're just working through the social license to advance that. Right now, we've got 2 communities, very supportive and long-term agreements in place with 2 communities. We're very open to having dialogue and discussions with the 3rd community. We'd like to do that. At the same time, Darren has said, well, let's look at a 2-community plan. So we are advancing the technical analysis, environmental analysis of a 2-community plan to see if we could look at moving or resiting the location of the mill and seeing if there's an opportunity to do that. At the same time, we're also advancing exploration there on the two community ground. So we think prospectively there's a lot of opportunity to find more gold and potentially copper in that region. There's porphyry targets around there that are very exciting. And a company that is not too far away, I think less than 50 kilometers away, Torex is operating well. It has a multi-billion-dollar market cap, and Los Filos is currently valued almost zero for the analysts that review the Equinox's assets. So I think it presents an opportunity, but head down. We're open to further discussions, but we're also advancing this two community plan that I think could drive value for all stakeholders.
Lots of stuff there, Ryan. I appreciate it. I think on Los Filos, definitely a lot of potential there if we can get the communities on board and get things sorted out. There's a lot there. Arizona expansion. You mentioned Castle Mountain, which good luck on that with the Fast 41. Lots of good stuff there. And then the exploration potential across the entire company portfolio is there. You guys will test that in due course in different areas. So I'm curious to see how you guys focus and prioritize these different things because you have a lot going on for sure.
Mm-hmm.
Very good information. And the good thing is backstop with some serious cash flow at this point with current gold prices. So that's great. Really appreciate you walking us through that and all the potential across the portfolio. With that, I want to just cover off. We talked expansion projects, we talked existing operations. That's all good. Want to move real quick to administrative stuff and we'll wrap up here. The company announced a divestment of operations in Nevada, Pan Mine, and also the nearby Gold Rock development project. Just talk a little bit about the reasoning for that divestment.
Yeah, sure. I mean, obviously, with a merger like this with Calibre, it allows the company to sit back and look at the opportunities, the strengths, the weaknesses. And for us, we believe that, full transparencies, the company does have approximately $1.3 billion of net debt. So our focus now is really shifting to delevering the balance sheet and then unlocking the value and delivering on all of the commitments that we've got from these assets. And so we want to put ourselves in a position, as you brought up earlier in the interview, to unlock the full value by returning capital to shareholders. But first, our priority is to delever that balance sheet by divesting of Nevada, these Nevada assets. And in full transparency, the assets are a little bit smaller within the portfolio, so 30 to 40,000 ounces from Pan. Gold Rock does bring a good development situation there that Calibre had advanced permitting and some engineering work on. So I think it presents a great opportunity for Minera Alamos, and we'll retain a 9.9% equity ownership in it. But it does allow for the company to focus its capital, but focus its human capital on the larger, higher priority assets within the portfolio. Kevin Riley and the team at Pan have done an incredible job and continue to do an incredible job. So we're very pleased to see that continue. Importantly, I think for us as Equinox, we've got to focus on delevering, and that's a high priority. And we're looking at the portfolio to see what else potentially could be a divestment. Is there opportunities to realize some value that are better off in someone else's portfolio than an Equinox portfolio at this point in time? And we'll see how that progresses. But at this point in time, we're focused on the operations. We've got an opportunity here where we continue to ramp up these Canadian assets, generating strong operating cash flow to be able to put down on debt and delever that balance sheet.
I think that was certainly the reasoning there. You guys maintain some of that leverage on the upside for Alamos as well, so that's good. Appreciate you walking us through that one, Brian. Just real quick, you mentioned balance sheet. Why don't we talk about that just briefly? How are things looking on that front with cash, debt? You guys just retired the 2020 convertible notes. Congratulations on that. And then also just cover off, if you'd like to, the key shareholders and the current shares outstanding.
Current shares outstanding, what do we have? We've got about 775 million shares issued and outstanding. Key shareholders, there's quite a few, but what I think is important is that management and board, led, of course, by our largest shareholder, Ross Beatty. I'm not sure exactly of his numbers, and I should know this off the top of my head, but I think it's sitting around 28 million shares that he owns. So he had a vision. He's created a significant amount of value for shareholders over the years. He had a vision, he stuck with it, and now starting to really realize, I should say, unfortunately, this was the vision and the concept, But gold prices going up means there's a lot of volatility and things happening around the world. But yeah, no, it's led by Ross and Darren Hall. A significant portion of his net worth is in this business. Myself, Blaine Johnson, Doug Forrester, all large shareholders of the business. Van Eck and Associates, I think, just owns a little under 7%. Another large shareholder in the business that's been around for quite a few years in Equinox is Donald Smith, that sits very similarly to Ross at about 26%. You've got all your classic large precious metals investors here, Baker Steel to Sprott Asset Management, Franklin Advisors, so large, long-term, low turnover, which is important as well, precious metals funds. And we continue to see inbounds and very high levels of excitement around the business and the future in front of us. So as I mentioned, I think at the end of Q2, we had 1.3 billion of net debt, approximately $400 million in cash. And cash obviously fluctuates quite a bit. At the end of Q2, we're still building the Valentine Gold asset, right? So I can't remember exactly, but we spent probably between 50 and $75 million more through Q2, but obviously continue to have robust, with these gold prices, operating cash flow. So really in a strong financial position, setting up for a strong Q3 and Q4. So excited to see how that unfolds. But yes, the focus is turning now. We have a $500 million term loan, a total of $800 million available revolving credit facility, which we've drawn approximately about $675 million. So the focus is now looking at delevering that balance sheet. If we look at 2026, we haven't provided guidance or outlook, but when I look at analyst numbers, and rightly so, you said it actually, Andrew, you said that our guidance for the year for 2025 is 785 to 915,000 ounces this year, right? That does not include the new Valentine Gold Mine. And as we mentioned, Valentine wants an annual run rate about 200,000 ounces a year. So that is not incorporated. So you incorporate that and you look at rolling 2025 over, you're approximately somewhere between 900,000 to 1.1 million ounces of production a year. And I can't say exactly where all-in sustaining costs will land, but let's be conservative and say somewhere between, I don't know, 1,900 and 2,000. All-in sustaining costs doesn't include things like interest payments, doesn't include exploration outside of that. So if you were to step back and say an all-in cost, absolutely everything, at about $2,600 an ounce, that the business is doing about $1 billion at these gold prices, I'll caveat, at these gold prices, of pre-tax operating cash flow. That puts us in a very strong position to delever the balance sheet rapidly. So I'm excited about that future. I think everyone here is focused, good structures being put in place. Darren is really driving roles and responsibilities and clarity and authorities in order to do that. We've just recently hired a new VP of Operations, Brian Wilson at Greenstone, to help continue to ramp that up and structure that as he sees fit. So I think that the future is bright for Equinox. The gold price is robust. If all continues to go according to plan and we deliver on expectations, I believe that there's a great opportunity here.
Ryan, just to follow up there on that, thank you for covering all that off. You guys are definitely making progress. I think it demonstrates you guys can quite quickly, as you said, rapidly take this balance sheet right back down into very good condition, completely remove the leverage if you wanted to. Not to say that there's not going to be other opportunities out there, but it's impressive how quick it can come down. And I think you guys will be showing that in 2026. One follow-up question there. As you guys get into steady state there, you work out the kinks on these very top tier projects in Canada. Is it now the point with some deleveraging in a current gold price environment? Would you guys look at some type of base dividend? Is that something that would come around the corner, or do you guys see that there's so much other work to do that you want to use all that capital for growth initiatives?
Absolutely excellent question. And so Ross has always mentioned this. He wants to be in a position to return capital to shareholders. With these gold prices where they are and likely continue to go higher, that's a focus. So we delever. Of course, we will continue to have some debt on the balance sheet. That's a prudent thing to do. We'll look at shifting up that balance sheet a little bit in terms of putting ourselves in a position to hopefully if all goes according to plan, we get a positive record of decision in the next year or two, be in a position to start building the expansion at Castle Mountain. And of course, we'll see how that goes. But of course, that requires somewhere between 500 and $700 million of capital. And we have to take that into consideration. But at the same time, absolutely, if we can put this company and this balance sheet into a position where we see strength, we see an opportunity to self-fund growth opportunities within the portfolio. So we're very focused on unlocking this portfolio. We're not looking at new opportunities outside of. We're very focused on optimizing and unlocking per share metrics, focused on not issuing more shares. With this environment, we should be able to do that rapidly. We should be able to put the best opportunities to return capital to shareholders, and we're going through the analysis now. We know that we will continue to invest in exploration because that's been a very high return on investment for companies. And I mean, I would imagine that we'll spend somewhere between $80 to $100 million a year on exploration. We will be looking at all of those things and other opportunities as well to unlock value on a per share metric. Our focus is driving share price performance. This is why we're here. This is why we're stewards of our shareholders' capital, to focus on driving value, share price performance. And if that means a dividend, a share buyback, or other returns of capital to shareholders, that'll be done. And I think in this environment, we could be in that position within the next 12 to 18 months. So an exciting time.
Absolutely. I think it makes sense to go after those different tools to be able to do that. And you guys have so much to do in the portfolio existing as it is today. Goes without saying that it's obvious that you guys in this market will still be looking out there on an M&A front. That's going to continue to be in evaluation mode as it always is. So good information on that. Look, I know you have to go here soon, so why don't we wrap it up at this point? For potential investors who are listening in here, the company has a market capitalization of about 8.4 billion US dollars. Why should Equinox Gold be considered within the institutional, family office, and retail investors portfolio at this point?
I have a chart in our presentation that shows the share price performance since 2022, I think year to date, beginning or middle of September. And what it shows is that all of our peers are in there that produce somewhere between 250 upwards of 750 or a million ounces of gold production a year or more. And what it shows is the performance of those companies is somewhere between 150 and 350+%. We believe we have the opportunity to have a top quartile valued gold producer because of the assets, the team, and this environment. We believe that we see the assets and the opportunity there. When we look at Equinox Gold, at that point in time, on that 2022 to year to date, middle of September, our share price performance was approximately 55% return. So you can see the large discrepancy in gap of value there. And when we look at an Alamos Gold or we look at an Agnico Gold, I know they've been around for a long, long time, but you look at the key metrics of those businesses. Those key metrics would be things like tier one jurisdictions, substantial long life assets, free cash flow, operating track record, organic growth, and valuation. And when we look at that, we can see there's a tremendous opportunity for Equinox to be a top quartile. We hit those key metrics, and we've just got to really establish ourselves in our operating track record as a go-to company. And I think that we will do that under Darren's leadership and under Ross's leadership. So that's what I think presents a very compelling opportunity. If you believe in this gold price environment and the future of what is being unlocked through the assets and price of gold, then this presents a very compelling opportunity.
Ryan, thank you for that. And how can interested parties contact the company?
Of course, equinoxgold.com is our website. You can email myself, ryan.king@equinoxgold.com, and we'll put you in touch with the relevant folks. Darren and I are always available for dialogue and discussion about our business and about the future. Darren obviously brings a tremendous amount of expertise and experience when it comes to large open pit mining operations. He's very happy to talk about Greenstone, Valentine, and the other assets in the portfolio. So willing to have one-on-one discussions anytime.
Ryan, thank you for taking the time to update on progress and operations at Equinox, and we're looking forward to talking to you here in the coming months as you guys progress. Thank you.
Awesome, Andrew. Thanks very much. Look forward to it and appreciate you taking the time.